Alive, a little bit hungry, I'm sure, but thank you for staying up late in the morning, late in the afternoon with us. I would like to thank at the outset the ICAI Dubai board members and also the management team for giving me this brilliant opportunity to talk about yet another very important investment class, which is real estate. Okay, there's a lot of discussion about stocks and portfolio, and there is no rivalry meant here, but there is one more asset class that is definitely worth consideration going forward. I am very impressed by ICAI for doing such a brilliant job, such a mammoth job in organizing so many events as philanthropy and spreading so much of knowledge and expertise among all the members. One small poetry comes into my mind just to bring a different flavor to you. कि ये इश्क नहीं आसा इतना ही समझ लीजिए एक आग का दरिया है और डूब के जाना है. I think the management members, I think, deserve a serious applause on developing ICAI members' knowledge credentials so regularly. I'm also very thankful to all the ICAI members. You guys are very impressive. Sunday morning, it's very difficult to wake up, but you all are here with so much of strength in your learning and eagerness about developing yourself and the society. Really, really appreciate that. Okay, I'm also thankful to ICAI for giving Windmills Group always for a long time such an honorable opportunity as the valuation partner. Now, this honor and the gratitude is very difficult for me to express in words, but an extra large thank you for that. So welcome to the world of real estate and the world of valuing real estate properties. How do I change this one? Green, in the middle. Can somebody show it to me? Well, for a lot of real generous introduction already for me, so I think I don't want to spend this time, on my personal introduction. My simple profile is 25 years of employment journey and about 15 years of business. So if you would like to start up your business and try something like that out, don't come to me, go to some sensible guy, okay? Because this is only 15 years. But if you still think it's worth to take my assistance, you're very, very welcome. I'm still struggling with this. Can you tell me? Oh, so sorry. 3 green buttons. Okay, so selfishly to share with you what Windmills is all about, we are now a 9-year-old company. We like to believe that we are a leading valuation firm from the perspective of the highest number of valuations done over the last 3 years, especially in Dubai, but also across UAE. We have 2 verticals of services. We have valuation services whereby we value all kinds of real estate properties for our clients, residential properties, commercial, industrial, and also trading properties like hospitals, hotels, and malls, etc., etc. We also value plant, machinery, and equipment assets with greatest details possible. The other vertical that we provide our services in is building surveying services, which is largely for owners associations and developers, whereby we assist them with reserve fund studies, service cost studies, building condition appraisals, and many more such services. We are very proud to have served more than 1,000 clients already in the marketplace, with 25,000 plus properties, real estate properties valued already, and something like more than 50,000 industrial assets valued. More than 50 building surveying assignments also carried out for our clients. One of the major purposes of my talk is to share some knowledge about how to choose a valuation firm. When you have some real estate assets or machinery and equipment to value, how to choose a valuation firm. And I think there are a few very important points. Does that valuation firm has a robust and a scientific automated valuation system which takes care of data and analyze the data in a way that it comes up with the precise market value? Very, very important. Of course, the fee economy has to be a very important consideration for you as well. But apart from that, the fast turnaround time, and most importantly, hugely compliant services in terms of international valuation standards and also local valuation standards. These are the important considerations for engaging a professional valuation company for your business. Okay, a lot has been said about different investment assets and the classes. And I'm not at all better or even equal to what the knowledge that you have. So we all know about the major ones: the cash, the bonds, the real estate, the commodities, the stocks, the businesses and the private equity, and now the new one as well called crypto. I never understand that. My apologies for that. But there are a lot of asset classes now where your balanced portfolio, comes into play. And you always weigh them from the risk perspective and the reward perspective and try to make a portfolio that makes your life easy and wealthy. But I would like to draw your attention towards one more asset class, that is real estate. In my humble, plain vanilla, simple experience over the last 40 years, there are a few asset classes which make people wealthy and rich, and that is stocks, real estate, and the businesses. Okay? So real estate is very, very important asset class because it's the largest asset class in any country in the world. Largest, by far. Two, is definitely an extremely important consideration for financial and tax management to value the properties that you have. It is a great source of wealth creation. It's a great source of wealth preservation as well. It is a great source of diversifying your risks and revenues in the portfolio. It's an excellent inflation hedge, and what a practical asset this is to be a collateral to all the lenders and the investors around. But before we go into the typical standards and the governance, the regulations, which is perhaps something that you come across most of the time, I wanted to give you some spice information about how the market is behaving in terms of wealth creation in Dubai. In the last 6 months, so the first half of the year, we saw about 21% increase in the total number of transactions that has approached more or less 100,000. It's a huge number for a city like Dubai, and it's growing every year, it's growing every quarter. We're talking about a very impressive sales value number also coming out of the market in the last 6 months, so only 1 year, a half year. And that is about 100 billion dirhams. Sorry, apologies, $100 billion. $100 billion is a big number for 6 months in any city. And I think Dubai has achieved it and is likely to achieve much more. And not only that, but the sales value overall has gone up by 29%. So indeed, a lot of people are making money out of this market too. It is largely skewed towards the residential segment, where about 96% of the investments are going through, representing the last half year. The apartments prices have increased by 70% in the last 5 years, and the villa prices have almost doubled in the last 5 years. I think the commercial space, whether it's office or retail, is also showing the similar trends over the last 5 years. Okay, let's get back to the original theme of the presentation, and that is, let's talk about some standards. How do we value the properties, and how do professional valuation firms value the properties? What is property valuation actually? It's a process of determining the value of an asset or liability. Value, I think someone said, is not pricing, it's a value. On a stated basis of value. Now, a basis of value could be market value, fair value, investment value, cost value, and many other types. And of course, the valuation process is amended practically to meet that basis of value accordingly. And at a particular point in time, a lot of people ask me, you give us the valuation report, how long is it valid for? Now, for valuers, it's a very difficult answer. It's a very difficult answer because a lot of clients don't like it. But valuation of a particular property done by a professional valuation firm is like a balance sheet. It's at a particular valuation date. It has no validity. It's up to you as a client to see what do you think, for what period of time this particular valuation can be hot enough for you, okay? But generally speaking, for the concept for purposes, it is a valuation at a particular date only. Okay. Why do we do valuations? Why is it necessary? Most of the people take into account the importance of valuation, a professional valuation, and go for it. Some of people in the market don't go for valuation at all. So what is the purpose? I personally believe, not because it's my own business, and I would always say never buy a property, never invest into a property without a valuation. Please never do that. So I think we all have that flavor of the clear purposes, like we need to make a reliable decision. We need to understand transparently what we are doing. We need to have a report that is standardized enough to understand it from one particular angle. It should be compliant, and definitely we can use it for our taxation purposes as well, which is the flavor of the time. But from the standards point of view, the international valuation standards point of view, there are some common purposes why property valuations are being used, and these are financing, investments, which is buy, sell, even divestments, merger and acquisitions, financial reporting, very, very important. It's a law now that each company has to value the properties that are reported in the financials every year. So for that purpose too, insurance is extremely important purpose for valuation. Gifts and golden visa management are the few examples of the technical purposes. My headline is, valuation is the backbone of financial decision-making process. And I would like to urge everyone to ensure that valuation is a very economic service anyways. Make use of it and make better financial decisions. Okay, so what standards do we follow? What standards should a professional valuation firm follow anywhere in the world? And there is IVS, International Valuation Standards. There is an organization called IVSC, based in the US, which makes and reviews all the standards and regulations about the valuations and spread them around in the world. We follow typically RICS, the Royal Institution of Chartered Surveyors, which is a professional body which also promotes international valuation standards around the world. And this beautiful book called Red Book, whoever is more interested to know about valuations, is a worth read. It's called Red Book, and it has some very interesting standards to look into. The professional standards, which talks about ethics and compliance, and also the technical and the performance standards, where you have the guidance about how to do the valuation for different kind of properties for different purposes. Okay, in addition, UAE is also becoming more and more aware, becoming more and more vigilant about the importance of valuations and its impact not only on the property, but also on the financial statements and also in the society overall. So there is a very practical book of standards called MRICS Book of Valuation Standards We also follow that. I think there are a lot of, and I would urge everyone to follow that too, because it's a requirement, and not only the requirement, but also an excellent tool to guide you in terms of how to do the property valuation in the best possible manner. Now, similarly, in each and every emirate of the UAE, luckily and gladly, they have also certain standards and regulations about property valuations and also other assets valuation. So this is extremely important for us as a professional company to follow them too. Okay, a bit more about the technicalities. What are the different approaches that we use in order to value a property? Now, it depends upon two major things. One is, what is the type of property we are talking about when it comes to valuation? And number two, what is the purpose of valuation? Type of the property, purpose of the valuations. That determines the direction for a valuer to value a property. In a standard way, there are three popular approaches which are promoted by international valuation standards. The first one is market approach. The market approach is the most common, the most popular, and the most practical approach that is used in valuing the properties. Two is income approach. It basically applies, no, let me go back to the market approach. Market approach is used for valuing those properties which have a secondary value. So the best valuation approach is when I can see a great evidence of transactions, listings, which can give me a complete, clear idea, categorical idea about at what level, what price level those properties are sold. That is basically the major source for me in terms of reliance for writing a market value. Income approach is basically applied to all those properties which are income generating in nature. And again, there are some diversification internally. We apply traditional investment method for an income generating property that has a bit more of a stable, non-volatile stream of income and expenses. For example, buildings. We apply a bit more complicated approach like you do in also valuing the companies, is DCF approach, where there are a number of multiple income streams and expenses streams and which are volatile in nature. One of my favorite valuation approaches is profit approach, which is applied on those kinds of properties which are trading in nature. So they are actual businesses operating from a particular real estate property, like hotels, like schools, like hospitals, and many such trading properties. We also have a third very important approach called cost approach. Now, where do we apply cost approach? The cost approach is applied on those properties which has no secondary market value, which are unique in nature. For example, post offices, metro stations, etc., etc. So we look at the cost. And again, further diversification about the cost approach, whether it should be a depreciated replacement cost, which is applied on the specialized machinery, or it should be a reinstatement cost, which is applied for the property for the purpose of insurances. So a little bit more technical, but that's the way it works. What is a market approach? In simple words, it's a comparison of the prices. Comparing the assets that you are valuing with identical and comparable assets for which the price information is available in the secondary market. Yeah, apartments, lands, villas, townhouses, and I beg to argue with the valuation standards about even shops and offices, which are income generating in nature, and technically they should be valued based on the income approach. But I always like to see the market approach for them as well, because I believe that it is a much stronger way of doing things, even for a second approach. So, for finding the right comparables, do we look at only market transactions done or market listings, or both? The answer is both. In fact, we also look at the third data set. So definitely transactions is the number one source for writing a market value because you see what is happening in the market in practice. Listings are also very important because they give you the direction for the next transactions, the potential transactions, but of course there are some adjustments applicable on the market listings too, but very important source of data for us. The third data source that we use is our own valuations because we know what we have done and these own valuations, previous valuations are basically a data of reliance for us. And we have an algorithm, the weighted average of 3 different data sets to be applied to funnel down to the market value. So what do we do? When we receive an instruction to value a property on the market approach basis, or if for that purpose, any approach, any property, any purpose, what do we do? It's actually quite a comprehensive and a detailed exercise. It's a matter of engagement analysis with the client, so we understand the scope from you, but we also tell you what you can expect from us. 2, we do an extensive documents analysis. We do an extensive property analysis by itself, including the inspection. And during the inspection process, we also measure the properties. A professional valuation company would always take the most time to understand the documents, the most time, and even more time in order to inspect the property and look at it from each and every attribute point of view, each and every quality point of view as well, and even measure the property on site. Very important. Then we do extensive market analysis, and finally, the valuation analysis and the approval process. Now, the most important thing, in my humble opinion, in the valuation process is the inspection process. So I would urge all the valuation companies, including myself, to ensure that we do the brilliant job in understanding the property physically and measure the property physically. It's extremely important because a lot of times we have surprises about that. And again, our ICAI has come up with many standards about inspection. Whether for office building, residential building, industrial building, there are separate performance standards and the procedures. Whether the perimeter walls have to be included in a particular property or not. Things like that are answered in the standards. So we talked about 3 data sets: sold transactions, previous valuations done by us, and market listings as our primary base to understand where we stand in terms of market value. But at times, we have shortage of having those data available in the market for a variety of purposes. Then we have to have a primary relationship with the brokers' houses, with the owners, with the tenants, and also with the developers in order to understand and receive the primary information in order to make a knowledgeable and a well-informed decision. Now, this is my favorite slide. Perhaps a little bit more complicated, but this is my favorite slide. I'm very, very happy to report to you that Windmills has been able to build an automated valuation system and application over the last 6 years. It is not only a tool for discovering a market price, but it's a total solution for the clients. It takes care of ethics, compliance, client service in terms of communication with the client automatically for all the important things, property analysis, market analysis, and writing down the value. So the first cut of the market value, especially for market approach, is coming out of our system called Maxima. So how do we do the valuations? We, first of all, having understood the information from the documents and the inspection about the property, we understand what are the most important ingredients and the attributes of the property. Each property is different than the other, especially the income generating properties. But each property is different than the other in terms of location, quality, age, view, demand, built-up area, land size, and many other attributes. Is it a middle piece or is it a corner piece? Is it on a single row house or is it a back-to-back house? And many such things. Now, a professional valuation company would like to appreciate each and every attribute of the property in the most realistic way, and transform the value of the attributes into the overall market value. Very, very important. So how do we do that? We actually weigh each and every attribute of the property. We rate each and every attribute of the property. So we have a WAR rating available on each and every attribute level. And then the system generates an automatic adjustments looking at those attributes of all comparables on the average basis. Extremely scientific, extremely important, extremely granular in my humble opinion. But you know, the human mind sometimes may skip a particular attribute or its importance or its rating, okay? So that's why Maxima was developed, and I'm very happy to say that the first cut will not only tell you what is the market value, but also the financial adjustments based on WAR rating on each attribute level. It took us about 5 years to build it, evolving in nature. And today, I think it's an extremely proud product for us. Income approach. As we said earlier, all the income generating properties, whether it is an office or a shop or a building or a mall where all the showrooms are leased out, has to use income approach for valuation. What is that? It provides an indication of value by converting anticipated benefits such as cash flows or earnings into a single current capital value. Being accountants, you and finance managers and investment managers and the CEOs, you perhaps know this better than I do, but this is a very beautiful concept of valuing a property. It applies on, as said, on all the income generated assets, but also it takes into account the secondary market data when it comes to its important financial considerations, like gross revenue from rents, like the going operational and maintenance expenses, like vacancies, like the most important number, the capitalization rate. So these are all available in the market, and we have to do, a professional valuation company has to do a very serious job in order to find the most precise numbers on these factors, most precise, in order to achieve the most precise valuation. So, and valuation is science. It's definitely science. It works on the basis of data. And the best is the data, the best is the valuation. Yeah. Okay, so I have to rush it up. You are aware of this formula. If you want to know more about it, you're very, very welcome. Last slide, maybe. Cost approach, as we said, is applied on valuing all those properties which has no secondary market value. So it gives you an indication of the economic principle that no buyer will actually pay you more than what it cost you by way of construction. Big question, what kind of cost approach shall we use? Shall it be a plain vanilla cost plus profit? Shall it be depreciated cost method? Or shall it be reinstatement cost method? Again, the answer lies on two things. What is the property? And what is the purpose of the valuations? For example, for insurance purposes, we always use the reinstatement cost approach. Yeah, because this is the cost that you have to find out for insurance companies as the new cost for the old asset. Okay, so I'm done. Once again, thank you very much. For the brilliant opportunity and honor for doing this presentation. And if you have any questions, I'm available around. Thank you
so much, Mr. Bilal. Can you just